2024 is set to be a huge year for crypto, with many heralding the return of a bull market sometime soon. We'll take a peek at 8 reasons why you should pay attention to crypto in 2024. From groundbreaking news to regulatory shifts, we've got the inside scoop on why the crypto market might be gearing up for a meteoric rise. So let's get right into it. In the number 1 spot, we have the biggest talk of crypto town. Bitcoin has seen a 155% rally last year, driven by expectations leading up to the historic moment on January 10th when all 11 spot Bitcoin ETF applications were approved by the SEC.
It finally happened. How many years? 11 years we've been waiting for this.
By the next morning, 10 spot Bitcoin ETF products made their debut in the US markets, and cumulative trading volume topped 4.5 billion in their first day. The Grayscale Bitcoin Trust led the pack with 2.3 billion in volume after its conversion into an ETF, followed by BlackRock's iShares Bitcoin Trust, which saw 1 billion in trade volume, and Fidelity's Wise Origin Bitcoin Fund with 700 million in volume. In case you needed a refresher on how this is a pivotal development, Bitcoin ETFs will greatly lower the barrier of entry to Bitcoin ownership, opening the floodgates for both institutional and retail money to flow in. These asset managers have trillions of dollars worth of assets under management, and if even a small portion of this flows into crypto, the effect could be very significant. Of course, this capital won't be invested overnight, but having the ETF as a gateway certainly paints a rosier future. Arguably, one of the most important bullish catalysts is the expected start of rate cuts by the Fed. The Federal Reserve kept the Fed funds rate steady at 5.25 to 5.5% for a third consecutive meeting in December 2023, in line with expectations, but also indicated 75 BPS cuts in 2024. So why is this good news for us? When interest rates fall, there is more liquidity in the market as fixed income instruments become less attractive, leading to more flow of capital towards risk-on asset classes such as stocks and crypto. This is the basic gist of it, but of course more factors are at play here. The economy could strengthen or weaken, geopolitical strife could worsen, all of which could affect the broader market, and yes, that includes crypto too. Then, one of the most pivotal events in crypto history is repeating this year. Every 4 years or so, the rewards for Bitcoin mining is cut in half, and the next halving is expected to occur in April 2024, which is when the reward will fall to 3.125 Bitcoin per block. Now, historically, this has always indicated the start of a bull run, with many citing the increased scarcity of Bitcoin as the catalyst behind the price hike. Want to keep your eye on the price? Well, then keep track or learn more about Bitcoin halving from CoinGecko's dedicated page. Sometime in May last year, Hong Kong Securities and Futures Commission confirmed that retail investors could begin trading major cryptocurrencies like Bitcoin and Ethereum in June 2023 under its new regulatory framework. The move is part of Hong Kong's efforts to establish itself as a digital asset hub, while ensuring investor protection, but also another indication that China and Hong Kong have turned around on their approach towards crypto.
All crypto transactions are illegal,
and how we can expect even more adoption soon. 2023 was a huge year for DeFi, with liquid stake tokens and real-world assets leading the charge in revitalizing this sector, along with a slew of other developments in L2s, dApp chains and modularity, novel DEX mechanisms, and more. As these continue to grow alongside new innovations such as restaking and fixed yield derivatives, DeFi's yield opportunities are set to lure capital inflow and will be a pivotal gateway for big institutional players to come on-chain. After a dry spell, money is finally making its way back into crypto. Glassnode's data reveals the 90-day change in stablecoin supplies amongst the top 4, USDT, USDC, BUSD, and DAI, flipped positive for the first time since Terra's collapse in May 2022. Historically, stablecoins have fueled crypto purchases, and this uptick suggests a potential surge in buying power and also a recovery of a lost faith in crypto. When in doubt, follow the whales. It would seem that the new influx of stables have indeed been put to good use. Long-term holders remain bullish on the prospects of a Bitcoin bull run and continue to accumulate. Bitcoin whales with 1,000 Bitcoin or more have also been showing signs of accumulation, which has normally preceded large rallies. One of these is, of course, famous Bitcoin maxi Michael Saylor's business intelligence firm MicroStrategy, which bought another 615 million worth of Bitcoin at an average price of $42,110, bringing its total holdings to 189,150 Bitcoin. In fact, according to Glassnode, it's not just the whales that are having a field day with Bitcoin. Shrimps, or entities with less than 1 Bitcoin, have also shown signs of accumulation. Similar to previous cycles, accumulation of this flagship crypto potentially indicates that the broader market as a whole is being prepped for a potential bull run soon. Well, that's it for the top 8 reasons on why you should pay attention to the crypto markets in 2024. Wonder where the king of cryptos is going this year? Well, then check out our video on that right here.